Looks like we are recording. Hi, this is Shane with Bitcoin Crypto News Online. Today we are going to talk all about the ETFs. We're going to talk about how the Bitcoin ETF, what it is, what it means for your investments. The ETFs have finally been on the market for some time, and this could change everything for you. I'm going to explain why this is very significant for Bitcoin, what kind of differences it's going to make, and also, as we dive into this, as we dive into what Bitcoin ETF actually is, we're going to see how that affects the crypto world and whether it's a game changer and what many of us have been waiting for. You've probably noticed there's a lot of news. It's quite urgent of what's going on with Bitcoin and cryptocurrency as it applies to ETFs. They seem to rush in the market and out of the market. What does that mean? Well, before we get started, let's take a time to look into the ETFs and see just exactly what this means. Now, I've tried to bring up some helpful things on the screen that you might look at. Investopedia tells us at investopedia.com that what is an ETF. It gives a very good definition of what it is. And I will scroll down there and show you. Here it is. It is an exchange-traded fund. It is an investment vehicle that may pool a group of securities into a fund, or it could be an individual stock, or even a commodity. It could be a diverse collection of securities or a single commodity. So these are bought and sold. They are on the S&P 500. They are tradable, and we will go into many different types of ETFs, different companies that have Bitcoin ETFs. We're going to stick with the Bitcoin ETFs. How does it work? Okay, well, it gives you the chance to get exposure to a different type of asset. And in this case, it's going to be Bitcoin. Some ETFs are bought and sold a little bit different than mutual funds, which only trade once a day after the market closes. ETFs offer low expense ratios and fewer broker commissions than buying the stock individually. That could be, I would say, in most ETFs, that's probably true. But for cryptocurrency, we will talk about that a little bit more and see what that means. I think when we get down to it, you will see that the benefits are not really in the fees so much. Okay, but it is traded like a stock. It's easier for traditional investors to get involved. Traditional investor for Bitcoin, just 10 years ago, you would have to get to a cryptocurrency exchange, sign up. Typically, if you're a U.S. citizen, you have to, do your KYC, know your customer. There's a process of putting your license on there, sometimes a picture of your face with your license, verification. They have to make sure they know who you are, and then finally you can get on the exchange. Now you have to link up your bank account or do a wire transfer, which can be expensive, can take time to do that, and then transfer your crypto onto the exchange. Some exchange will make you wait a period of time before you can buy any cryptocurrency, or if they allow you to buy cryptocurrency, you will have to hold it for a time until they make sure that everything's been cleared with your bank or whatever form you're paying. Some will take a credit card for payment for cryptocurrency. Some will only let you buy a stable coin like Tether or USD. A stable coin is just a coin that is worth $1. It always is worth just about $1, give or take a penny typically. Excuse me. And then you have to trade that for your cryptocurrency. So they're charging you a fee potentially 1 to 2 times to be able to buy your cryptocurrency. And then you can leave it on the exchange, and there's risks to leaving it on the exchange. We've seen exchanges close down. We've seen some of these platforms that hold cryptocurrency that are not your own wallet, not your keys, not your coins, is a saying that goes around in the cryptocurrency world. So sometimes people have lost access to their coins, and you're very fortunate if you can get them back again, or even get just a fraction of them back. So that can happen. That's a risk. So, or you get a private wallet which has a 12 seed, it's 12 words in a specific order that you have to memorize. It's quite a long code of like 140 digits and characters long, digits, letters, things like that, small cap, large cap, all that stuff. And if you lose that, you lose your coins forever. So there's a lot of risk. It's complicated for someone who's new. So some people are like, okay, you know what? I don't want to get on the exchange. I don't want to get my own paper wallet. I don't want a ledger wallet. I don't want this stuff. I know how to use my Charles Schwab account. I know how to use my Fidelity account. I know how to use my Vanguard account. I know how to use Robinhood or whatever account. I'm not saying one's better than the other. I'm just giving some examples. You could get on there and buy an ETF just like you would any other stock or any other mutual fund that would be on the platform. Very easy. They're keeping it under custody and protecting it at some level. Also, for a commercial investor or an institutional investor, especially someone who has the money from someone else that they're trusted with, they need to make sure that these things are safe. So there is a good possibility. Well, we're seeing it happen already that a lot of investors are going to the ETFs. They're going to BlackRock. They're going to these different companies. Even retirement funds are wanting to invest in Bitcoin ETFs or Ethereum ETFs, and they're looking for BlackRock and custodial accounts. They're not wanting to hold their own Bitcoin on an exchange or in a wallet, an electronic wallet or a paper wallet. They don't want that. They're afraid it doesn't set well with their customers. They have to give them a reasonable belief that these funds locked up in the cryptocurrency will be safe. So there is some good stuff about it. Also, if you have a retirement fund, unless you have a self-directed retirement fund, it's very hard to hold it on a crypto wallet. Even some crypto wallets will only let you take the money out if there are 2 out of 3 people who approve of the transaction. So it takes 2 people minimum to allow the coin to come out. So the owner of the Bitcoin holds one key to the Bitcoin wallet. The company holds one key, and then a third party holds another key, and they are the arbitrators. So that if there's an argument, this is going to be good if people want to borrow against their Bitcoin. This has a lot of uses, but it can also be used in a self-directed IRA, not tax advice. Again, not investing advice, not tax advice, but these are things you can look into. So, the typical institutional investor wants the regulated company, the banking type company. Love it or hate it. I know Michael Saylor got a lot of flack for what he said, and I listened to it, and I didn't think that it was all that bad what he said, but I was only getting some snippets of it. I listened to it all the way through, and I actually don't agree with what he's saying at all. But I do agree with part of what he says, and that is that there is a certain amount of stability that is going to happen as there's regulation in the cryptocurrency market. And the highs and lows that we see eventually, as more institutional money gets in here, most investors and economists and people who track this are saying that the same thing happened to gold. The volatility of gold was crazy when it first was a ETF, when it first came out. But as time went by, it really started to stabilize more. Even though we're seeing some good gains in gold right now, it's not like what we have seen in Bitcoin. All right. So, yes, Bitcoin's in the news. The Bitcoin BTC, that's the ticker sign for Bitcoin. Bitcoin ETFs soar with the 294 million inflows despite the price going down to 67,000. And this is dated today, just came out today. So this is not an old article from the currencyanalyst.com. And you can look that up if you want to read the entire article. It goes into some detail. I think we've done that on our news, gone into that pretty good. We did look at that. Here is a list of the companies that are offering the Bitcoin ETFs. This is on etfdb.com, and you can look it up. Of course, Grayscale is one of the big known names because they got in early. This not only tells you the companies that have the ETFs, it gives you the ticker symbols. So if you want to check this out, it's etfdb.com. There are the ticker symbols. You've got iShares or iBit, as it's known. We got GBTC, Grayscale, Fidelity Bitcoin Fund, ARC21, Bitwise, Grayscale, ProShares, on and on and on. Quite a few of them here. Franklin, remember Franklin Templeton? They are getting into them. There they all are. Some of them are multi-asset. Some of them are just currency. And there's more than one page here. There's actually 2 pages of them. So you can check that out if you want to look at it. They do tell you the year to date. You can see that several of these are 50%. That is pretty good. I don't know if they show the 1-day change. Down here, lower, I believe we have some more information. I could be wrong. Where was it? So they talk about diversifying your portfolio with Bitcoin. Some people, oh, here it is. The expense ratio is 0.98%. Excuse me, my throat's getting dry. So BTCI is one of the exchanges that wants to generate monthly income through covered call strategy. This is people that are, betting either for or against the market. A lot of volatility, a lot of risk here. It has an expense ratio of 0.98%. I was hoping that they would show the expense ratio of those different ETFs, but I'm not. I thought it was here, but maybe I saw it somewhere else. So anyway, this does give you the list. You can click on those links and get more information on any of those, and I'm sure you can find the expense ratio on them at that website. So, how will the Bitcoin ETF affect Bitcoin's price? Well, that depends on who you ask. Because of the options that I just talked about, people betting that the price will go up or down, this can have a positive or negative effect on the price. Overall, it should have a stabilizing effect. This article is at Forbes.com by David Byram, and he talks about it. And I wish I could, maybe once I click that, I can get in there. Here we go. All right. So David tells us here that last month the Security Exchange approval NASDAQ ISE to list and trade options on BlackRock's iShare Bitcoin Trust, IBIT, making a significant step forward in bringing regulated Bitcoin to the options to the US market. So, yeah, people are going to be betting on this high and low. You could do a hedge fund type where they're trying to hedge against, other things in the stock market because Bitcoin does kind of act like gold. We will look at that in a minute. Here it explains what Bitcoin options are. It gives the holder the right but not the obligation to buy or sell Bitcoin at a predetermined price within a certain time frame. For institutional investors, these options provide a mean to hedge against price volatility or speculate on market movements without needing to hold the underlying asset. Personally, I don't like that at all, but it's not my world. So this is the way it is. It says if approved, the approved rule includes strict position and exercises limits, capping positions to 25,000 contracts, which they say is designed to minimize market manipulation. We'll see how that works. But they tell you here how you could actually use Bitcoin to these options to hedge against exposure, giving you brief understanding of that. I think that is something that I would not do. I would not recommend at all. And if that's something you want to look into, then do a ton of research and you'll probably still lose a ton of money. The liquidity in Bitcoin. This is a good thing. So we talked about the options. They could be bad or good, right? They could stabilize price, which we like volatility when it's going our direction, but we don't like it when it's going down, like what's happening right now. So that is good and bad. If Bitcoin can creep up at a slower rate and not have the big tanks down, I think I'd be happy with that. But I see it just continually up and down all the time, and more sporadic than it has been. I see it and feel like it will hold the price down more than anything else. Cointelegraph.com tells us here, Zoltan Vardai tells us about the liquidity that has increased. We've talked about it. It's a lot. But what this will do, this liquidity should stabilize price a little bit more. The consistent inflows into the ETF highlight the institutional demand remains strong with this morning's approval by the SEC approval for Bitcoin ETF options to be listed on the New York Stock Exchange. We believe this will provide ETF with the needed liquidity to attract sustainable inflows. Continued ETF inflow could help Bitcoin price reach all new high. The ETFs accounted for about 75% of new investments in the cryptocurrency by February 15th as it surpassed the $50,000 mark. What I think is happening is we hit a high quicker than we should have, and we have not hit the high that we should have hit already because of what these are doing, these whole ETFs, and now these the options that they're adding. I think they're slowing it down. I think overall it will still continue to increase. We'll have to look back and see. It's just a guess. So there it is. Risk on sentiment to grow leading up to U.S. presidential elections. We already talked about that. We want to stick with the ETFs. If you look at this here is the BTC USD 1 year chart. We started off way down here with only a little bit of money in there, and now it is way up here. We started off, is there a dollar amount? It looks like we're down in the, I don't know if that's correct. It's showing $3,000 here and it's showing $68,000 here. So, 75% gains. That's pretty good. All right. Bitcoin ETF versus gold. Well, what does that mean? Gold is supposed to be the safe haven when the dollar's weak and when the stock market crashes. This is the hope. RhinoBitcoin.com tells us about this. Again, Bitcoin ETFs versus gold ETFs, the changing safe haven landscape. So this is a great asset. If you don't want to touch Bitcoin, I would suggest learn about it, study about it, buy Bitcoin any way you can, eventually hold some yourself, because the whole idea of Bitcoin was for you to have custody, for you to control your own currency, your own store of value, for it to be out of government's hands and manipulation, to be out of the banking industry's hands and manipulation. And we're seeing it go that direction. I wrote a book, Bitcoin Equals Freedom. It's right here. You can get a electronic copy at Amazon for a couple bucks, or you can buy the hard copy. I think it's only $5 or $10, something like that. I forget. But anyway, this is what's happening. This is where we're at. So let's check out. Gold is a store of value. Bitcoin is a store of value. The masses are starting to see that. Physical gold needs storage, transportation, security, limited terms of divisibility. You can only divide it up so many times. You can only access it so much of the time because you have to keep it safe, right? Someone will beat you up and take it away. Digital and decentralized, making Bitcoin globally accessible. Transfer fees are cheap, secure, easy to store with encrypted digital wallets, easily divisible in one in 100 millionth of a Bitcoin. So 1/100th of a millionth of a Bitcoin. That's one Satoshi. So in a Bitcoin, there is 100 million Satoshis. So very, very easy to divide it up. It says here, for instance, consider storing $1 million worth of gold versus the same value in Bitcoin. The latter can be stored in a small USB driver or as a 12-word wallet in the owner's head. Some people scratch it on a plate of metal. I wouldn't. You got to get my download on how to be safe, because this 12-word seed is the key to your wallet. You don't want anyone to get that. Just email me at Bitcoin Crypto News online at gmail.com and I will send you that, no strings attached. All right. Moving gold can be expensive, while Bitcoin only requires internet connection, open source software. In fact, you can do it from satellite. Bitcoin is connected via satellite. Cannot be stopped. No one can stop it at this point. They can regulate the heck out of it. They can punish you. They can regulate the heck out of it, but they cannot stop it in the global world. The gold market cap for gold is 16.4 trillion, while we know Bitcoin is just under 2.4 trillion right now. But Bitcoin, given current trends, can catch up very quickly. A lot of people think that will happen in the next few years. Here is Bitcoin in gold price. BTC in ounces of gold, BTC in grams of gold is the white. So here it is, moving up quite a bit in percentage. BT price in grams in gold, Bitcoin price in grams of gold. So it is going up all the time, where down here is a lot less grams of gold, and over here, a lot more grams of gold. Ounces of gold, down here, very few ounces of gold Bitcoin was worth, and now very much. So Bitcoin, what this chart is telling you is Bitcoin is flying past gold. BTF, Bitcoin's ETF launch versus gold ETF launch. Now this is very interesting. The first gold ETF came out in 2004. It came out at $400, and now it is, I think, near $3,000. They say $2,400 here. Now, 2024, BTC, Bitcoin, is launched as an ETF, and it has already risen quite a bit. I think we just said 75% in the last year. So quite a bit up in margin, and it's just getting started. Will it outpace gold in the future? I believe it will. It says the research showed that only about 20% of the ETF shares were owned by institutions, while 80% were owned by investors. So as investors pour into the market, that is going to crank up the market, and because it's going to flip. There's going to be 80% of the institutions owned it, and the other investors will be the minority. That's what's going to happen, because that's what's happened with gold. Mostly investors and institutions own most of the gold. So Bitcoin ETFs over the long term, institutions will have much more money to purchase ETFs shares than will individuals. So it should outpace. Let's see, they've got a little bit more on gold losing to Bitcoin. Major financial institutions are increasing their allocations toward digital assets, and that is going to ramp up after the first of the year like you've never seen before. Regulatory environments adopting to foster and protect this evolving financial landscape will make companies feel safer. Public becoming more educated on Bitcoin's comparative advantages over traditional investments. They will pour in retirement accounts. You can get an IRA and buy ETFs no problem right now and put them in your retirement. Easy, done. They're offering it. They've been offering it for months. People are starting to do that. These account managers, these financial advisors are recommending anywhere from 1 to 10% Bitcoin allocation into people's retirements. So why did this do this? Let's see if we can get this one here. All right, Bitcoin versus gold, mapping the current trends due with historical data. Bitcoin gains relative to Echo Gold's super run in the 1970s. Now we're going back to before it was an ETF. We're just talking about the whole gold versus Bitcoin in general. And you can see here, if you look, since 2019, here is Bitcoin, here is the S&P, and here is gold. Gold is a gold color, and S&P is blue, and gold goes above the S&P sometimes, and then it follows it pretty closely. Where Bitcoin started to do that, and now we are way up here, way, way above, hundreds and hundreds of percent. It looks like 475% increase over that period of time. So pretty amazing. If you would have put $1,000 in just back in 2019, imagine where you would be now. You would be quite a bit higher. Here we are putting it into a percentage range. So since, let's see, gold versus equities. So overall, gold has separated from its market, from the equities, and it has gone up and above the equities. So that's something to think about too. I like real gold, but you know, you got to keep it in a safe deposit box or someone will rob you and take it all away. And Bitcoin, yeah, you can memorize your key. You can keep your keys in a fireproof safe or in 2 locations. You can use a electronic wallet, a digital wallet, and let's see what we got here. Okay, I think we already looked at that. Now, here is the return on investment. This is where the rubber meets the road. Bitcoin is on top, gold is green, and the S&P 500 is in red. Oops, went too fast. So you can see here, I'm trying to get the date for you so we can see the date. Since January 2020, I believe 2020, This is a trading view chart by Tybro Verbarsky. Verbovsky. Hard to say those Russian. It looks like a Russian name. Hard to say. So here we go. Bitcoin jumped way above, came back down during these hard times right here, and has gone up again. This must be possibly just this year. So just this year, Bitcoin ROI 65%, gold 25, S&P 6. So pretty incredible. Meanwhile, the dollar has dropped quite a bit, and that means gold is keeping up a little bit, but the S&P probably is not when you take the true cost of inflation. So let me look at my outline here and see what else we were going to cover. We looked at the providers. The impact on the market potentially could lead to more stabilization, potentially could lead to a higher price because all the ETFs, they're grabbing all the Bitcoin off of the counter, behind the counter. They're taking it off exchanges. Exchanges are peeling it off little by little so that they don't affect the price, and it is being bought up quicker than it's being mined. They can only mine so much Bitcoin. With the halvening, they used to get, for every block that was solved in the network, the rewards. The rewards for the miners, I'll just keep it real simple. The rewards for the miners used to be 6 and about a half Bitcoin. Now it's about 3 1/8 of a Bitcoin, if I'm not mistaken. It's right around there. So a lot less rewards for the miners that maintain the database for Bitcoin. That's where it resides. They're getting a lot less. They are having a hard time making Bitcoin at the price that it is right now. Bitcoin price has to go up. So we know that they're going to cause the price to raise because they are causing all of the Bitcoin to be taken, and there's very little left on the exchanges right now. For the average investor, what does this mean? Well, it means that if you are to invest in Bitcoin, whether it be with an ETF or with your own cryptocurrency that you hold, however you hold it, you are potentially going to gain what has been about 50% average per year for Bitcoin. There are down years. There are years where Bitcoin loses money, but it is definitely a 2 or 3 steps forward and 1 step back type of investment. Typically with Bitcoin, history rhymes. It doesn't repeat itself, but typically we have about 3 good years and 1 bad year. Okay? That's how it usually goes. ETFs provide legitimacy, so this is something you could put in your retirement. This is something you might invest for a business, for your personal, if you are not sophisticated or you are afraid to use Bitcoin on an exchange or to hold it yourself. This might be an option for you. The potential risks and drawbacks, well, there could be overregulation. There are rumors that the government could, take our bank accounts, freeze up our 401ks, and maybe even freeze up ETFs. Is that possible? Anything's possible. Is it going to happen? I hope not. I mean, we haven't seen anything like that since about 1933 when our government seized all the gold. We haven't seen anything like that in quite a while. But it could happen, but hopefully it won't. Have we seen the banks get locked up around the world? We have. Have we seen accounts get frozen? We have. So those things are not far-fetched with the way the economy is, the way the US dollar is, the way the turbulence in the world is. Anything's possible, right? So you need to plan accordingly. Consider your investment strategy. You might talk to your financial advisor and see what they say about adding this to your portfolio if you are interested in ETFs or other types of Bitcoin or crypto ETFs or trading device, trading commodities. And the pros and cons, again, this is a lot easier to enter by buying ETFs. It's very easy, very accessible, much easier. I would recommend, if you do that, to also get educated on Bitcoin, find out about it. Don't just set it and forget it. Try to figure out all about Bitcoin. Subscribe to our channel, subscribe to other channels, and get input and learn about Bitcoin. If you can, go in person to an event and talk to someone. We're doing an event November the 13th, I believe, at the Ponderay Community Center. There's going to be a Q&A. We'll have a PowerPoint presentation, handouts, get your questions answered. Go find those on meetup.com. Make sure not to give your money away to anybody. Don't get scammed. Just get information and get yourself educated. Comparing to buying actual Bitcoin, again, I believe that holding my own Bitcoin is safer and more secure for me. Is it more complicated? Yes. Is there more at risk if I mess up? Yes. But I feel that I have been studying it, and I have a lot of safety precautions in place to try to maintain that. I don't put all my eggs in one basket. You can get more than one wallet. You can get more than one type of wallet. You can keep some on the exchange if you're planning on trading, if you're comfortable with that. But just make sure it's reputable. That's what I do. So you can do the same thing. Well, I suppose that's it, except for our final recap. Bitcoin ETFs have the potential to bring massive changes to the market. In fact, we've already seen them, but like any investment, it is critical to do your research. Remember, the ETFs come with pros and cons, so absolutely do your research. If you are interested and you want some information or guidance, I am not a financial advisor, but I can tell you what I did. You can email me, reach out to me, and we might be able to book up a schedule of time if that's something you're interested in. So if you liked today's episode, if you got some value out of that, please hit the like button, subscribe, and get the notifications for Bitcoin crypto news online with your host, me, Shane, and I will try to keep you informed with the things that are pertinent day to day. And with that, I'm out of here. Have a great day.